Hey everyone, Abdullah with you here again. Today we're going to go through another stock recommendation. We're going to go over American Well Corporation or Amwell. This is a stock I bought earlier this week on Monday at about $22 a share. This was a stock buy alert on my Patreon account. So if you want to get stock alerts and stock buys that I'm purchasing, make sure to sign up for a Patreon account. The link is below. In addition, make sure to subscribe, like, and comment on the video. It always helps the video and to be able to make sure as many people see the video as possible. So with Amwell, the stock IPO'd last week at $18 a share. It hit the market at, let's see, it was about $22 a share, and then it went to up to 25 on the first day, and then subsequently it went slightly lower, just like we saw with Snowflake and some of the other IPOs. They did really well on the first day and then started slumping a little bit. So on Monday, I had purchased the stock at around $22 a share. Did some research. I'll be sharing some of that research with you guys. Just like their model, their main competitor in the space is Teladoc, which also just acquired Livongo Health. So Teladoc's probably the bigger company in the space. Their revenue is about 4 times what Amwell's revenue is. However, I like Amwell's model in that it's a little bit cheaper. Looking at the downloads it's had, it has a significant amount of downloads and people using the app. It's about 40 to $50 a visit for Amwell, and it's obviously a little bit cheaper if you do have health insurance. And then for Teladoc, it's about $79 per visit. So Amwell's a little bit cheaper, which gives it the advantage in that people will want to have a per visit cheaper cost and do not want to pay as much. In addition, as you can see here, Google has backed Amwell. They put $100 million investment into the company, which is about a 3% ownership stake into the company. Just to go over some of the financials, the company had 149 million in revenue in 2019. In the current year, due to the telemedicine boom with COVID-19 and the pandemic, people are just calling into their doctors and they're not actually going in person. There's been a significant increase. Revenues up about 77% so far through June 30, 2020, to almost equating to the whole of 2019 with regards to revenue, coming at about 122 million in revenue. The company is going through significant losses. They have 111 million losses, but this is expected. The goal of the company is to increase top line revenue, and they'll continue to do that. The company has significant amount of cash, about 1.1 million in cash. So it's the market cap's at about 6.3 billion currently, and about 1/6 of their market cap is sitting in cash. So even though the stock might be based off of other metrics that I've seen when considering gross margin, as far as their profitability, when you consider revenue minus cost of goods sold, that the company might be a little bit overpriced, but I think they have a lot of room for growth in the space and continue to be able to start taking market share from Teladoc and other competitors with their 1 billion in cash. So I think there's a lot of upside with this stock, and I think it'll continue to grow. Considering COVID is going to be here for a while, and it'll be quite a bit until we get a vaccine out there. So it's something that you should put in your portfolio or consider for your portfolio. Do your own research, read into articles into Amwell as well as Teladoc, but you definitely want to have some kind of telemedicine in your portfolio because this is a kind of the future of how people visit their doctors, and people will be more inclined to visit their doctors virtually rather than going in person, based off of their experience with COVID-19. So this is my stock recommendation. Definitely, as always, like I said in the beginning, subscribe to see more videos like this. Sign up for a Patreon account. We'll see you guys later. Take care.